Hope you guys are having a good day so far. My name is Kenneth Beard. I run Stock Indices where I go over economic data reports and I go over price action in the stock market. I go over my positions so you guys can get an overall understanding as to what it is that I'm looking at. I make these videos so you guys can get more knowledge and a little bit of what my thinking process is when I do analyzation of the stock markets. So yeah, we're just gonna hop straight into this video. Today's Friday, December 30th. We have this is the last trading day into the new year. So yeah, it'll be interesting to see how price action reacts to that because in the previous years we usually see some sort of volatility or some sort of spike in price action going into the new year. So it'll be really interesting. But yeah, this is the last trading day. As far as economic data goes, we had the Chicago PMI numbers. Did those numbers drop? Let's refresh. Let's see. Yeah, so previously we were at 37.2 and we're up to 44.9 for the Chicago PMI. So that is a good thing. Now, let's go ahead here and take a look at price action. So the S&P 500, we saw a decline in the beginning of the day. If we go to the 1 hour chart, saw a decline in the middle and beginning of the day. Saw a quick reversal. We ended off green on the day. We ended up, let's see, it says we were down $1, but net change $1 from yesterday. So since yesterday close, yeah, we're down about $1. That's about correct, $1.01. So a little bit of a decrease since the previous day. But if you look at the daily chart, we're just consolidating sideways right now. The SMAs are showing us that as well. So holding up here, defending that 377, 91 or 376, whatever you want to call it, this zone down here. You can see that buyers have been defending it and keeping us in the consolidation period. We haven't yet advanced towards higher levels and we haven't declined to lower levels. So implied volatility, though, has been seeing an increase, a really big increase, which is interesting to me. So, just looking at, let's go here. Yeah, so we see implied volatility. Let's go out. Let's get 14. It's about 22%, which is high. I'd say anything above 25 or anything close to 25 for implied volatility on the index is in the higher range. So seeing a spike in implied volatility, so we see the drop off, and we're kind of just hanging around here. So currently, not on the SPY, but the SPX, I have puts that I sold, put credit spreads that I sold at the 3,700 again. So I sold at the same strike. I closed out a recent position for $170 of profit at the 37 strike. I sold a spread at the 37 and 3,700 strike, and I sold it again because my thing is if you're making money on a certain strike and you're still near that strike and the price action hasn't really gone anywhere, I suggest that you just continue to play that same strike over and over again. Just roll it out to a later date and collect more premium and just keep doing that same trade over and over again until you scraped all the premium possible from it. And then that's where you can go ahead and as the price starts to advance more in your favor, start to sell at some different higher up or closer to the money strike prices because you don't want to sit down at 3,700, which was, if we look at the 14-day, 3700s give us a 19 delta. But if we go out 27 days, 3700 gives us a 24 delta. So the further out in expiration, the larger the delta is going to be on that strike. So keep in mind with that. But yeah, I just sold here again, same strike, scraping up some of that premium again, and then doing the same trade. No reason to do anything different here. So the QQQs and Nasdaq, what's that doing? Let's see. So I had something like this going on. We did pierce through this, but you can see the market quickly reverted back above here. And now we're sitting here inside day today. Kind of some indecision going on here. It could go either way. Next week we could fall from here or continue to advance. Really want to wait for the confirmation of the price action to see whether or not we're going to advance towards higher levels. And then we have levels up above that we have to conquer, like the 270. Then we got the 280 and then the 295s up above for the Nasdaq. But as of right now, SPX is leading us as far as advancement. Looking at the mini Dow Jones Industrial Average here. Today we had a red day, kind of the same thing where we saw an extreme decline. We saw an extreme decline in the beginning of the day, followed through with some strong momentum towards the upside. And that could be, like I said, because of the new year. Things like that usually happen. So I won't be surprised if we see a big rally coming into the new year here to start us off good. Overall, it's looking like we're holding up nicely. Here we see the head and shoulders pattern. Left shoulder, right shoulder, head broke down. We could see something like a retest of the support area, which is now resistance and a dump. So keep in mind with that. That could be something that could happen in the Dow Jones if price action decides to follow through. But if the buyers are too strong and we see volume step in on the buy side, then we have levels up above to reclaim at what's that, 33,500 up above, and then we got 3,400 or 34,000, excuse me, or 34. What's that? 34,658. We have those levels. Those are the levels up above that we have to conquer before seeing new highs for the Dow Jones. So that's all I got for the indexes. Oh yeah, what else do we have? The volatility index still sitting at some low levels. Nothing to be concerned about as far as volatility, still presenting to us that we are in stable conditions. Anything I would say above 30 for volatility is an extreme level, which we were at one point, but we've been declining so far. Kind of been sitting around this 24 to 20-ish range here. So I won't be surprised. We could get up to 26. That's a possibility. But as long as we stay below 26, we're not seeing anything too catastrophic. So sitting at a pretty good level for the volatility index. Want to see maybe us revert back down to 20. We can revert back down to 20. I think that the market will see some more advancement as far as price action towards the upside. We have bull put option spreads on Visa, as financials have been keeping my portfolio nicely hedged against the downwards trend of the overall market with inflation and with interest rates. I think financials are good to put your money in and keep you safe when the dollar becomes super inflated. So, been keeping my money nicely diversified in the financial sector. Got Visa here, which has been keeping me alive. So got some Visa on here. Then I have MasterCard. Let me look. Give me 1 second. Wow. The next financial stock I have currently is a MasterCard. MasterCard's sitting up here. Got some bull put option spreads on this as well. Sitting probably around a 330. My TD Ameritrade is acting funny, so it won't let me see my open positions. But that is the second position I have in here as far as financial goes. Just like I like the overall base point of it. I mean, we've broken out of that downwards channel that we were in. And then not only that, I just like this price action here, how we're holding up. I'm above the 340. So, and I like how it looks right now. Not too much volume in it. Not too much volume in it. But, as far as I can get as long as I can get a decent premium out of it, which I have been able to get, and as far as I'm able to, as long as I'm able to have it stay above certain price points, I'm okay. And as I'm looking at it right now, I believe that in the next few weeks we're not going any lower. So Visa, MasterCard, both keeping my portfolio nicely protected from whatever the market is doing right now. But over the weekend we'll have a lot of theta decay in our spreads, which will make us some good money. Long weekend, about 4 days until the market reopens. So we should be good. We should be 100% good. And one of the stocks that I do want to add, though, I tried to leg into it today, but it would not let me, and that's Meta. I really like Meta's price action. Meta's been on a deep, steep decline. We recently reached some oversold areas on the RSI, and we had so far 3 nice advancements. We got this first initial advancement, consolidation, and another advancement, and now we're consolidating again. And I believe certainly that we're going to get another advancement here with the gap fill. I was not able to leg into it. Extremely pissed, but it is what it is. I'll still be able to trade it next week once the markets reopen, and I'm looking to sell some premium on this and take advantage of that price decay and price advancement. So with that being said, that's everything that I'm looking at so far. I'm expecting the market to open up on a good note, and if we don't, of course, we manage our risk accordingly, like all of you guys should. But with that being said, I hope you guys enjoyed this video. Leave a like, comment, and subscribe. That is my daily analysis. Not very complicated, like I said. I don't do too much. I just look at the economic data reports. I look at the overall indexes, the market averages, see how those are performing on a daily basis. Look at the volatility index, see how that's performing. Don't really do too much, news. Like I don't look at, maybe for individual stocks like the financials or technology like Meta, you may want to look at and see what's going on because there could be something that you're not seeing. But if price hasn't already been factored in, and if earnings aren't coming up, what you're seeing right now is the base point reality of what people think about a stock. So you may see some news like, hey, stock's going to do this, do that. But if the price action has not already done it, then it has not been done. And it's not for certain that it's going to happen. So news can never help you in the aspect of predicting a stock's price action. It really can't. You know what I'm saying? This is a setup here. Advancement, consolidation, advancement, consolidation. And what's going to happen next, most likely? Advancement again. Okay? So, price action is your number one friend. and that's what's going to keep you in the game in the long run. Not what some other guru said on Twitter, not what some news articles said about what political leader did this or that. That's not going to help you. All that's going to get you is confused and in a cycle of just a cycle of constantly trying to chase the next big thing when really price action is the only thing that is going to essentially keep you in the game. Because price action is what the real stock believes in. Price action is what the masses believe in. What the price is currently doing right now is what has already been priced in. You have to use what's already been priced in to then go forth and make an assumption about what could potentially happen in the future. Right? So, hope you guys had an amazing day. Hope you guys have amazing New Year's, had an amazing holiday. Don't get too caught up in what's going to happen in the new year. And also, don't be having a bunch of pointless New Year's resolutions and bull crap like that. Put in the work anyways. I don't have a single damn New Year's resolution. Like, I really don't. My New Year's resolution is just to keep grinding, keep doing what I'm already doing, which is showing up every single day, no matter what it is. Show up every day, make a YouTube video, continue to read and gain knowledge, continue to save up money, continue to reinvest that money, and continue to make more money. That's the only thing that matters. So, with that being said, I'm going to end this video here. Leave a like, comment, subscribe, share this video, and I will see you guys in the new year.